Hi everybody. Thank you for coming to the workshop. I'm here with NFT Go. If you don't know about us, we are a data analytics company. You could really think of us as sort of the coin market cap for the NFT space. Everything right now is free to use, so please come check us out. It doesn't cost you anything. The topic of today's presentation will be related to data analytics. So what I've done is pulled out some data, done some statistical analysis on the NFT market, and hopefully some of the collectors out there will find this information useful. To provide an intro, what I did was I collected the top 500 NFTs and some basic high-level statistics, and try to see if you can find any interesting correlations in the data. The first thing I found, comparing the average all-time historical price on an NFT versus its floor price as of about a week ago when I did this presentation, the median return of an NFT was negative 0.07 ETH. Does not include gas costs, so it could be much lower after that. What's interesting is that only 9% of the top 500 NFT had a floor price that was actually above its average all-time price, which means that the median investor is underwater in their NFT holdings. That doesn't mean, however, that overall returns are negative. Well, we found that overall returns are actually positive, up 30% across all 500 NFTs. And this is possible largely because the right tail skew, there you have a handful of NFTs that made a lot of money. So as we all know, we can think Bored Apes, Mutant Apes, the unicorns. I have here sort of a chart showing you, all the NFTs in the collection and the returns on each. The vast majority of them essentially flat P&L. And then you have a couple here on the right tail that made up for all of the rest. This chart is a similar chart. All I did was add the cumulative P&L from left to right. And you can see all the way up basically to here, the cumulative sum of your P&L on NFTs were negative until the last couple of NFTs that kind of make up for everything else. So not anything new. This is what we all kind of understood, that the NFT market is kind of like VC investing. There are a handful that make a lot of money, and the rest of them kind of just, not so good, not so bad. So what we found is obviously we want to try to identify the unicorns, right? There are a handful of projects that'll make it really big, and those are the ones that everybody's trying to find, what is the next Bored Ape, CryptoPunk, so on and so forth. So looking at some of the metrics that we see on a lot of these websites, the first thing we compared was the percentage ownership. So on the x-axis here, we have the owner's percentage. You can think of that as how many wallets hold a collection. If there are 10,000 NFTs in a collection and 8,000 wallets, then we would have 80%. So that's sort of how you read the bottom. And on the y-axis, we have the floor price. And here we plot the maximum floor price for each ownership level. And as we would expect, the more widely distributed the ownership is, the higher the maximum floor. So what you see is down here at 20% holders, it doesn't really go very far. Over up at 80%, we see floor prices above 20 ETH. So we know that high ownership is a necessary condition, but it's not sufficient. We have a lot of projects down here with high ownership but their prices are not very spectacular. So that's not going to give you the answer, but we do know that if the ownership percentage is not high, it's unlikely to be a 10 ETH plus collection. Here's the same chart. Instead of showing the maximum floor price, we just show a fitted line. And as we would expect, slightly upward trend as we go higher in holders. Here's that line kind of zoomed in, taking out all of the individual dots. And it's a rough guide, I would not trade on this information, but it's a rule of thumb. You can see anything above 50%, the floor price starts to rise with about 80% holders, leading to a price of around 0.8 ETH. The next metric that we look at here is trading volume. So here is the 24-hour volume in US dollar terms. And as you would expect, the higher the volume, the higher the floor price. You need volume to get the price up. It also makes sense to the extent that the project teams, they derive revenue and royalties through trading volume. So the higher the volume, the more revenue the team is making, and the more resources they have at their disposal to reinvest into the project, build out the roadmap, and continue to grow the community. So volume is a good proxy for that. We can zoom in a little closer to see what the line looks like. Obviously, the majority of projects, never make it beyond a certain volume level. But the handful that do obviously the floor price matters, right? The higher the floor price, it doesn't take as many transactions to get to higher trading volume. But yeah, so this is just something to keep an eye on, that the trading volume does make a difference. So, we've gone through some high-level metrics, holders and volume, showed you sort of some simple relationships that might help you. Please. Right, so this information assumes that there is no wash trading, and if people get wise to this, it is possible to manipulate the markets through wash trading and try to drive up the prices of their NFTs. It's also possible to see whales just pay up, buy their own NFTs from themselves, and everybody sees this high volume, the price is going up, so everything with a grain of salt. The market is certainly ripe for manipulation. Okay, so the next thing is diving into a comparison, right? We've seen a lot of projects that have started off very high and subsequently come down. And we have the cases with the unicorns that go up and keep going up. So is there any way we can distinguish or differentiate between the two types of projects, right? That's what everybody wants to know. So what I did here is plot the time series of trading volume between two sets of NFTs. So the blue line are the blue chip unicorns that we saw earlier. And then the orange line are NFTs that started off with very high trading prices that subsequently came down, more than 20, 30% from the peak. Some patterns to note. Trading volume is always very high within the first 3 weeks, first 20 days, and essentially settles in at a low trading volume, right? So you see this dip and a spike, that's typically the mint, and then there's the release, the reveal. A lot of trading happens in the first 2 weeks and then kind of trends down over week 3. And these are patterns that collectors may be familiar with. through their experience with the NFT process. What we do see here is that trading volume for the blue chips tend to find steady state at a slightly more elevated level than the projects that kind of die out. So interest, trading volume dies out much more quickly and settles at a very low level for the projects that don't make it. And the projects that do make it end up having higher sustained interest over time. And so yeah, I mean, this could be helpful, right? If you don't catch the mint, then maybe what you can do is say, I'm going to wait until the third week. When things have settled in and decide, okay, does it look stable? I'll go in, if not. So, it tells you don't fall into the FOMO, right? If you miss that move, just wait and see, wait for the third week, and you can reevaluate at that time. Here I've plotted the average price across the two sets of NFT projects. You see the orange line, it peaks very quickly. So, high price, everybody's FOMOing into the project, and the price falls. And after the third week, this is the key kind of time testing period, it continues to fall. And as it continues to fall, it's a self-fulfilling prophecy. People leave the project, interest dies down. For the blue chips, for me, this was surprising. It's not like it just shoots up. It's actually a rather steady, slow trend upwards. And this is something that's easy for investors to get behind. If you buy it at a reasonable price, 2, 3 ETH, and it goes up and down, but you never lose a lot. You're always kind of in the money. And this is the kind of project that makes it easy for somebody to buy and hold for the long term. And at no point in this chart do you feel particularly uncomfortable or fear the need to paper hand your NFT because it might go to zero. So I think what you can learn here is look for NFTs that have a slow, steady trend. Maybe you didn't buy on the mint, you wait a few weeks, but you see that the price action is very steady, it's a small upward trend, and you like the story behind the project. Maybe you wait till the third week to go into the project. The last thing here we talked about before, the concentration ratio or holder ratio. This is also surprising to me. The blue line is the blue chips that made it, and the orange line are the ones that, the fallen angels. And surprisingly, the fallen angels have much higher holder concentration ratio at an earlier period. So, don't know exactly why, but I could hypothesize perhaps a lot of whales are dumping because they don't believe in the project. So that's causing the distribution to reach a much wider audience at an earlier period. So, where in the prior slide we said that concentration, holding ownership percentage is a positive metric, this suggests that too much distribution at an early stage is not necessarily a good thing. So something to keep your eye on. Perhaps the individual small investors are being used as exit liquidity for the whales who are able to mint and sell at a large profit. The last thing we want to touch upon is really the influence of the smart money or whale investors. So these large institutional buyers, they could be influencers, perhaps people who have large bags because they're Web3 founders, part of alpha groups, or even venture capital or hedge funds that invest heavily in the space. These people have the ability to really make or break a project. If they decide to hold and drive up the price, that can create that virtuous cycle of a slow, steady trend up that creates a sustainable price action, or they can dump really early and create a panic that could ruin sort of an otherwise strong project. So, these people, these whales, control about 25% of the NFT market. If we look at all wallets that hold in excess of 1 million in a value in NFTs. And a lot of these wallets are also market influencers. They have large followings on Twitter, and they are able to bring in a lot of retail interest to back up and increase the momentum. So yeah, the other thing is follow the whales. So with that, I'll turn to our website and sort of show you, how you can track the whales using the tools on NFT Go. So this is our website, nftgo.io. As I mentioned, everything right now is free, and we will remain free. We will have a premium version with certain features like APIs that will allow you to do a similar kind of analysis that I've shown you in the previous slides. But everything here you see is free and will remain free, so feel free to use it.
Can I ask a question?
Sure.
So you're mostly talking about PFPs here. Have you done an analysis around, other type of, NFTs market? I'm curious about, the crypto art market as well, where maybe, I don't know if you have the influence of whales or, I don't know, any type of analytics you've done. Those
Right.
projects as well.
Not yet. I think that would be an interesting question and definitely worth looking to. But I think for this, the most popular NFT is the PFP collection, so that's why we started with that. But that's a very good question and certainly something you'd be able to research with our data API.
You guys have the data already, you just haven't run the analytics.
That's correct. Yeah, so one way I use this tool is I would go, let's say we want to see what's happening right now. So let's limit ourselves to the past hour, and then we can filter it by volume. So what's being traded in the past hour, we see a lot of names that you would expect, Mutant Apes, CryptoPunks, RFTK, but you might find something much lower like Kami Genesis. So what's going on over here? It looks like they recently minted. There's a lot of price action going on. The price trend is going upwards. And we can take a look at the holder concentration as we discussed earlier. It looks like the number of whales involved is relatively low. There's only one whale currently. So it looks like primarily community buyers trying to buy in the secondary who may have missed the initial mint. It has a rather high distribution ratio, which is not necessarily good. As we saw earlier, in the early stages, it could be beneficial to have some whales who are sweeping the floor and sort of helping to pump and support the price. So this is one way you can use the tool. Just use a ranking, identify new projects you haven't heard about. But if this interests you, you can go and join their Discord, obviously do your own research and make sure you know what the story is behind the team besides just the price action. Another thing you can do is access our Whales tab. And at our Whales tab, you can see, for example, what are whales buying in the past hour or so. Here it looks like this whale is buying a lot of this 10KTF project. So, you could say to yourself, all right, what does this whale know that I don't know? Maybe I should go look into this project, read up about it, and see if it's something worth looking into. I would point out yesterday, a lot of people who did come to our booth, I was going through the same process. We saw that there was a lot of trading activity in Ghostly Ghosts. I'd never heard of the project, but we saw that a lot of whales were buying into it. And since yesterday, the price has gone from about 0.23 ETH to about 0.78 ETH. So it does help you identify interesting projects. But yeah, with that, that concludes my presentation. Hope it was helpful. If anybody has questions, please don't don't hesitate to ask.
Thank you very much. I really appreciate it. And since I love your presentation, I had like a simple question. Is there a way to download your slides and the research you did? Because it would be really nice.
Yeah, I don't know. I think I asked the NFC group, is there a way to, is there a way for them to download the slides or? Okay, or we'll put it on the Twitter too. You can download it from our Twitter site, nftgo.io. Anybody else? Right now, NFT Go only covers Ethereum. We are building out to be multi-chain coverage. So we will have BNB and Polygon probably next. And we plan on having full coverage in the roadmap. It's just a matter of time. Yeah, I think there's like an average price. So you can see the average price. There isn't an RSI. I don't think it's liquid enough. You know, maybe in the first 2 weeks you have enough liquidity to allow for that. But as you've seen, once you go past the first 3-week period, then the trading becomes, you know, much more sparse. So it's much more difficult to have accurate technicals. Yep.
Yeah, great presentation. I saw a price estimator tool up there. Can you speak to that, how that works?
Yeah, so that's just a placeholder. It's coming out soon. We'll have that finalized in the next couple of weeks. But yeah, we'll be using a lot of, you know, statistical machine learning algorithms to help us estimate, you know, what is the price of something that may not have traded, you know, in any time recently, but be able to estimate based on its ranking and other factors, you know, what its value might be. You could reference the within the project, you know, what have similar NFTs traded at, and also across projects, you can see, well, what is the average, you know, 50 percentile NFT trade relative to the floor price, so stuff like that.
How are you scraping data? How are you getting the data?
The data is coming directly from the blockchain, so we're not reading from OpenSea or anything. It comes from the blockchain.
So as far as I have seen, what you're trying to like analyze are market data, and I was wondering if you also have some data about like tweeters or like some algorithm that can, you know, predict price according to tweets or NPL like models.
Yeah, absolutely. I mean, I really want to get my hands on that data because I think it's super valuable, right? If you can count the number of Discord users, figure out how much Twitter interaction there is, even go inside the Discord servers and see how many messages are being sent, that would be super valuable. I think there'd be a lot of alpha, but you know, it's so hard to do that for every single project out there. But yeah, if anybody gets that data, I would love to see it. All right, well, thank you guys for your patience. Hope you enjoyed it.